Hello, and welcome to CMS Forex News. I'm Nick Nassad. Today is Wednesday, March 12th. Consumer sentiment dropped for the third month in a row in Australia, according to the Westpac Banking Corp. The index fell to a 15-year low as global slowdown and a weakening stock market dampened sentiments. The interest rate hike campaign that began in 2002 will come to an end with a combination of the central bank seeing more manageable inflation and global growth risks threatening. Aussie bulls took a break in March, as can be seen in this flag formation. Today's poor consumer confidence report did not have much of an impact on the Aussie against the greenback. A continuation breakout may be emerging as this recent retraction from a 950 pip month-long uptrend bounced off the 61% FIBO level and penetrated the upper band of the trading channel. The Japanese economy maintained a stable growth of 0.9% in the fourth quarter. Recent indicators have shown that Japanese exports are enjoying demand from emerging economies such as China and should limit the negative spillover from the U.S. slowdown. The Japanese current account surplus widened, supported by strong export growth. Capital outflow is growing, which may limit the yen's appreciation. This in turn will support export growth by keeping Japanese goods from becoming uncompetitive abroad. For February, the 3.5% annual corporate goods inflation was the highest in 27 years. Import prices surged 21.1% on the year due to record oil prices. As an importer of oil, energy, and raw materials, Japanese households reported lower confidence on the economy in the face of the surging import prices. Also, the housing sector is going through a rough patch with the more stringent building codes. For January, the index of consumer confidence is at a 5-year low. Corporate profits are also deteriorating, so a buoyant foreign demand will be a key component to the recovery and growth of the Japanese economy. The yen gained today, but not based on the positive fundamental data. The main driver of yen strength came from risk aversion, as investors scrutinized yesterday's Fed proposal. After yesterday's rally, the dollar-yen pair dipped 150 pips in today's session. The bout of risk appetite was short-lived, as shown by carry trade favorite, the pound-yen pair. After a 400 pip swing, the pound stalled its gains as the pair slid 180 pips overnight and into New York trading. Similar movements were seen in the Australian dollar-yen and the New Zealand dollar-yen pairs. The UK's January trade deficit remained essentially the same as the previous months. A weaker sterling has helped boost total exports to the highest level since June 2006. A 0.9% increase in Eurozone industrial output bested expectations for January. Strength in economies other than just Germany provides a sign of hope that the Eurozone economy will weather a US slowdown. The greenback failed to extend yesterday's rally and fell to a new record low against the euro. Investors are not so sure that the Fed's announcement yesterday would have the impact needed to turn the economy around. The pair is up about 200 pips from the session open. Tonight, New Zealand will report on retail sales, while Australia releases employment data. Japan will release industrial production data. Tomorrow morning, we get retail sales, weekly jobless claims, import price data, and business inventory levels from the U.S. Also, the Swiss National Bank is expected to hold rates steady at their meeting tomorrow morning. And that's it for this Wednesday edition of our broadcast. Thank you very much for joining us here at cmsfx.com, and happy trading.